The following is a presentation of TFNN. The Trader's Edge. Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the February 11th wonderful Wednesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything we can to have an extraordinary Wednesday. Let's always remember what's talked about is a dream. What's envisioned? Well, what's envisioned is darn right exciting. Of course, what's planned becomes possible, but what's scheduled is real. And I want to really thank you for scheduling your time with me this morning. I'm grateful for your presence here. I'm certainly here to serve you. Feel free to reach out at 877-927-6648 or internationally at 727-445-1044. Remember, if you've got a question, I guarantee you one thing. Somebody else has got that exact same question. In fact, not just somebody else. Probably many people have that exact same question. So don't call in for me. Don't call in for yourself. Instead, make it be a random act of kindness. Yep, that's the way to start your day, a random act of kindness. This is Wonderful Wednesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow is trading back 53 points, trading out at 17,815. The S&P down 2 points at 2,066. The composite is up 6 at 47.94. The Russell 2000 back a couple of points. DAX up 6, FTSE's back 28 points. Gold is off about $8. Silver down 8 pennies. Light sweet crude back about $1 right now. Lead the charge. The upside, you got Netflix, Team Health Holdings, WellCare, Euronet Worldwide. Martin Marietta having a nice day again today. Priceline is up a couple of bucks, $4. Pioneer Natural Resources down $9. Tesla off $6. Marketo down about $6. AOL off 6. Pier 1 down 27% off, about 450. You got Caesar, Stone, something or other. Penske Automotive, Anderson's, Baidu, all to the downside by about $3. But let's start off by taking a look at what's going on, excuse me, inside of the ETFs out there. That was, I guess that was I won't tell you what that was. Let's go take a look at the Dow Diamonds. I'll try not to tell you what that was. Let's take a look at what the Dow Diamonds are doing out here right now. Trading back just a bit. Trading out at 178.26. Dow Diamonds continue to trade inside the resistance level right here. That's the resistance of this trading session from January 9th. That had a high of 179.06. The Diamonds want to try to make its way back up there. That had volume, by the way, 6.6 million. You hit it with 7.2 million on February 6th. It says, boom, I want to be right back up there. It wants to get up there and test that wall. It wants to try to cross that wall. Yesterday's volume, hey, no real volume behind that move yesterday, 3.5 million shares out there. That's what it wants to do. As long as it continues to trade inside 176.63, it'll take another run for the 179.06 level. If it closes above that, then it'll be on its way up into the December 26th level, somewhere between 180.19 to 180.71. That's what's going on inside of the Dow Diamonds. If we go take a look at the SPY out here, the SPY, it's trading above that resistance level. Now, old resistance becoming support. Looks like that level might have been tested, that level being 206.42 so far. The intra-session low, 206.45. Close, no cigar, but close enough for a test out here. So long as the SPYs are able to close above 206.42, which they did yesterday, not with any volume. The volume on that swing point from January 9th at 158 million shares yesterday, up and over with 96 million. But that's okay. That just says to stay above it, come back, test it. That's a change in polarity. That means the price moves higher. That says that the SPYs move up to 208.97. You get back below 206.42 today, then you get another failure, but it really depends on the volume. It's volume schmolium as we speak right now. That is that's in the SPYs. If we go take a look at the QQQ ETF, what is it trying to do right now? Well, it's taking on its January 23rd swing point. That adds 34 million shares. We know that the Qs, we pointed out yesterday what the Qs have done is they broke through a trend line. You break a trend line, Says you break the trend. Well, that trend was to the downside. Now it's broken to the upside out here. What we saw was a break. Nice, no volume behind the move. 23 million shares out there. It's always a bad thing when the Qs make start running higher with light volume, and it's for a totally different reason than the way that you use it. If you want to use it the way that it should be used, the way that things change, because things are not always the same. I know most people think they're always the same if they want them to be. People don't like change. Let me tell you, folks, change is really what it's all about. You want to learn how to use tools because that's really what it's all about. Here's how volume works inside the QQQ ETF. No place else. But the Qs, it does. Why? I don't know. I got my own theories, but those theories, I can't even prove them. What I can prove is how it works. And how it works is this way. What the Qs do is they make bottoms with big volume. Okay, just wrap your head around that. Get that through that mind of yours. That's what the Qs do. That doesn't mean that it goes back down there to test that. They make bottoms with big volume. When that pattern changes, we can come back and take a look at it. The bottom on October 15th, 108 million shares were traded down there. What the Qs also do is they make highs with light volume. November 28th. 17 million shares. I don't remember when Thanksgiving was. Let me see. What's the next day? 12/1. That was the Friday after Thanksgiving is my guess out there. But you come back to other volume, other highs out here, inside of the Qs. They start making like September 3rd. September 3rd, 25 million shares out there. But those are at highs. The Qs make highs with light volume. The Qs make bottoms with volume. It's a cool technique. It's a cool tool out there. That's really how you want to go ahead and use volume inside of the QQQ ETF. Don't get caught trying to do that with other things out there. But inside the Qs, that's what it does. So, the volume, we're going up on fumes. I hope that what we really see take place in the Qs, they just kind of they climb the wall, and they get up to that wall maybe next Tuesday, next Wednesday, next Thursday, whenever it might be. They test the November 28th high at 106.25. They do it with less than 17 million shares out there. Then that becomes our signal that the Qs have topped. And then we have to realize that as far as they're going to pull back, the likelihood is they're just simply going to pull back into the December 16th area and just continue with that consolidation pattern. And then we see it bust out of the consolidation pattern or begin to bust out sometime in the middle of or the early part of March out there. So that's what's going on inside of the QQQ ETF. We go take a look at the small caps, the IWM out here. Russell 2000. Russell 2000 continues as a trading in there. Now, it's not trading in there right now today, but you'll want to watch to see if it can close inside 119.54. 119.54, that happens to be the bottom of the December 31st swing point out here. That's 35 million shares that were traded out there. We saw the IWM get in there with 32 million shares on the 5th. It stayed in there with 32 million shares on the 6th. It got below with 32 million shares on the 9th. Yesterday, back above with 28 million shares. Not a lot of volume. Here, remember, volume only 1/4, 1/4, maybe not even equally weighted 1/4 of what goes on inside of your analysis of any kind of a stock chart out there. So as we take a look at the IWM, what does it want to do? I think it wants to make a run for its highs as well. And that's in the 121.41 level. But first, it's got to close above 119.54. That's what's going on with the 4 ETF indices out here. If we go switch over, take a look at the futures. And since it's the Dow that is the one that is the laggard out here, let's go take a look at the Dow. Here's that 30-minute chart. We showed this just as the open of the opening bell out here. What we saw was on that 30-minute chart, what the Dow futures had done was they made that 7th inning stretch pattern, that G pattern to the downside at 8:30 this morning. They confirmed it during that next trading session at 9 o'clock. Now, as we take a look at where this thing might head to, let's see, what color do we want to use to go put our labeling on there? So you're only in that second wave to the upside. Looks like maybe, let's go see here. Is that looks like that MACD may be crossing positive as well. That says, okay, you get at least a fourth wave and probably a test of the highs here from yesterday. So at this stage of the game, it's the Dow that's a laggard, so we'll pay attention to it. Where it becomes a problem is if it goes ahead. And then we're talking about the futures contract. It takes out the lows of 17,742 out there. It has not done that. That's what's going on the 30-minute chart. Hey, let's go stick with the Dow anyways. Let's go from the 30 to the 120. Then we'll try to get a gauge of what's going on out here. So what do we know about the Dow on the 120-minute time frame out here? Well, it made 5 waves to the bottom down here. This was coming into the 4 p.m. time frame on February the 9th. Now it's just been consolidating after making 4 waves to the upside. You're trading in between market profiles out here, so it hasn't busted to the downside. This market profile, by the way, this has more of a bullish view to it than it does a bearish view. Why do I say that? Because that point of control, it is closer to the line of support versus closer to the line of resistance. So the message here on the 120-minute chart is that the Dow wants to try to break 17,815. That's the number to be watching on the 120-minute time frame. You break above that, that says then you're going to go at least test the high here from yesterday, and that would be out at the 17,831. I'd say more so what it would be telling us is you're going to go ahead and bust it to the upside. If it doesn't bust it to the upside, watch 17,701. That's your market profile low. That's your support level inside of the Dow on the 120-minute time frame chart out here. Let's go take a look at the 5-hour energy chart, the 300-minute chart. What does that show us? What this shows us here is you're only really in your second wave to the upside. Inside, whoops, didn't mean to do that. I meant to do this. Meant to expand it out this way. So this says, hey, you've got more to come. Of course, this has got resistance as well. So 17,832 is its resistance. Hopefully, you're writing these down on a pad of paper. I'm not, but that's what it shows on the 300-minute chart. So you get above that. And that says, hey, you're going to go at least go test the high here from 2 o'clock in the afternoon on February 6th, and that's out at the price point of 17,893. That's at the highs. That's what's going on the 300-minute chart. Let's go take a look at the daily chart. We take a look at the daily chart here for the Dow. What is its signal? Its signal, well, first, obviously, you know, the signal on almost any chart is a sideways consolidation move, but you're up towards the top of that pattern. On the daily chart, what the Dow futures have done is they have cleared resistance. So now support inside of the Dow on its daily time frame ought to be 17,628 out there right now, trading out at 17,766. That's what's going on all 4, well, at least 4 different time frames for the Dow. We go take a look at the, let's do the same thing here. Let's do this for the NQ. Let's take a look at the NQ. Let's look at the daily chart. The NQ, where are we at? Well, we're in the second wave on the way up on its daily time frame. Things are in bullish mode here. Price is above its market profile high. It did that yesterday. Did that the day before. It did that the day before that. So that becomes a fairly well-tested area. That's at the 4210 level. So that's in bullish formation out here. This says that on a daily basis, what the NQ wants to do is it wants to make a move up to the high back here from November 28th. Wants to at least go test the low of that high. The low of that high is 43.12. The high of that high is 43.48. So the daily chart says, hey, all full steam ahead. Now you got this little bear sash candle out here that says resistance is really at the top of this bar, the top of that bar being the trading session from January 26th. That high is 42.78. 42.78 should become support. I could put a line across there. In fact, why don't I put a line across there? Why don't I just put a line across there? Let's do that. Let's draw that line in. Let's do this kind of line here. Here becomes your level of what should be, which was resistance, now should become support inside of the NQ. That's using the daily chart. And that's that's the level. That price point is 4278.25. This is Steve Rhodes. This is TFNN. We get back. We'll go look at the 120, the 300-minute, and the 30-minute chart for the NQ as well. We'll be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 68, S&P is off 3, Composites up 7, Russell's down 4 points. If we check in real quickly before we go back to those intraday charts for the NQ out here, we go take a look at what's going on inside our favorite currency pair. At least it should be our favorite currency pair. That is the Euro-Japanese yen. She's now breaking free. She is now breaking free of that. It's trading higher, breaking free of that consolidation, breaking free of the trend line. If we take a look, well, I think it is. Let's go take a look at the trend line out here. Let's put this trend line. Let's make it a red line. Let's see where this thing. It hasn't broken through the trend, that's for sure. But let me see. That's and we're not going to take a look at a short-term trend, but that's where it's headed to. Let's go take a look at retracements. Let's go from the retracement high down to the low out here. It's at least going to get up to the 0.382 retracement level. That price is 137.65. So this is moving north, but the market's moving south. That is a good thing for the markets because the markets will go ahead and they'll correct themselves. They'll get back in line with the Euro-Japanese yen. When they do that I can't tell you, but they will get back in line with the Euro-Japanese yen because there is extraordinary correlation. Let me see if I have that chart here. I shared this with subscribers yesterday, Monday maybe. It might have been. Let me see here. What I'll do is I'll try to. Let me try one spot here, see if it pops up. If it doesn't pop up real quickly, then what I'll do is I'll have to go back because I've got so many different potential charts for us to look at. What if I can do this by date? I can do this by date. Let's see. Out here, 5.9, there we go. So, ES Euro. Yeah. Let me try this chart out here. Let me see if that pops up on the screen. Okay, yeah. Here's a chart. So now what you've got now, the euro yen, it's got a 15-minute delay on it. Let me actually do this. Let me do this. Let me edit this chart here. Let me turn this off. Okay, now we've got a pretty good view. Now this is a 1-minute chart out here. We had a caller. I think it was K Rico. And K Rico was trying to use the Japanese yen. I suggest that what he really used in the U.S. dollar, what he really used is the euro yen currency pair out there because of the way that it tracks. So the top portion of my screen is the euro Japanese yen. It's on a 1-minute time frame. Does it move tick for tick? No, but it is. The market will resolve itself. Just take a look at the correlation. Take a look at the correlation between, you would think you're trading really the same thing. The directional correlation between the euro Japanese yen and the S&P 5. The ES mini contract out there. Look at that correlation. There is no better currency pair that tracks the U.S. stock market better than this, especially if you trade the ES Mini out here. And, even though there's a 15-minute delay on this, I don't think that it's fallen off of the rooftop out here. And we saw that it was moving higher as we were taking a look at the daily charts out there. So it's got a bunch of meaning that you want to go ahead and pay attention. In fact, as long as I'm over here and we're taking a look at those correlations, an email that came through was asking, hey, how about FCX? And I'll go back to the NQ for you. We'll just try to do that. The question was how, where's FCX going to pull back to? And the answer to that question is I don't know the answer to that specific question. What I do know that you want to pay attention to is that if you're going to trade FCX, you might as well be trading the Aussie US dollar currency pair, because the top portion of my screen is the Australian versus the US dollar currency pair out here. This too has a 15-minute delay on it, but you can see there's been no bullish reversal signals inside this currency pair. So we'll go back. I'll take a look at that currency pair just to give you an idea. But if you want to look at a directional correlation between the Freeport McMoran and the Aussie dollar, it is direct. So when you're trading when you're trading FCX, you are trading. You're not trading the rest of the gold stocks and mining stocks or oil stocks. I think they're in both mining, right? They're mining, and I believe they also got into the liquid mining, right? They got into liquid metal. They got into black gold, Texas tea. So you're really trading out here as a currency. You're trading the currency. Absolutely. That's what FCX is. I mean, you look at this chart and that correlation is so gosh darn direct that that's really what you're trading. So the real question is not where is FCX going. The real question is where, in my opinion, where's the Australian dollar going? So if we go take a look at this, I think we covered this yesterday, but we're going to do it again because the email that came through. So let's put this on, let's just put this on a monthly chart. Looks like some of those things are still up here on the screen. Here's what we know about FCX. We know that we know about the Australian dollar. If we take a look at its low, the low that was put in, 60 cents, okay? So that said that for you to buy one Australian dollar, it costs you 60 cents US out there. Not bad if you're traveling over to Australia. Sucks if you're going from Australia back here to the US, but not bad if you're going the other way around. Now, if we go from that low all the way up to I believe that sucks is a technical term, is it not? If we go from the low back in 2008 to the high here in July of 2011, you're below the 0.618 retracement level. This says the Aussie dollar wants to get down to 70 cents. So trade FCX when you see the Aussie dollar get down to that level. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, Dow's off 75 right now. S&P is down 4.5. We're going to go back and check in. Composites up 6, so we're going to go back and we looked at the daily chart for the NQ. Let's go take a look at the 5-hour, the 2-hour, and the 30-minute charts out here. So in the 5-hour, well, let's just go back to the daily. It seems like it's been a year ago since we looked at it. So just to get our perspective here, our feet all warm and fuzzy. Inside of the daily, what we know is significant, should be some significant support. Up at the level, well, really a couple levels for significant support, but the first one we're going to go with is at 42.7825. You're trading at 42.90 as we speak right now. So that's the daily, about 42, what I say, 42.75, something like that. If we take a look at the 5-hour energy drink chart, there's a possibility, though, that it is in the 7th inning stretch pattern out here. It's either number 7 or it's a number 3. It is trading also above its market profile, above its resistance level. And this was actually a pattern here that would favor the bears. And when price got above it here at 5:15 yesterday afternoon, that was bullish. Nothing more bullish than the failed bearish pattern out here. So we're more likely in the 3rd versus the 7th inning stretch on that 5-hour chart. We are getting a test of these highs from back here at 5:15 in the afternoon on January 23rd. And those highs are 42.85. You're at 42.91 right now. That's what's going on the 5-hour energy drink chart. If we go to that, was sponsored to us by we ought to get a sponsor by the 5-hour energy folks out there. If we take a look at the 2 hour, what's the 2 hour show us? 2 hour shows us it's very likely in just that fourth wave to the upside. We know here is that this also was a market profile that favored the bears, but instead of it favoring the bears, it held as support. That's the one that began at about 2200 hours yesterday evening is what I should say. That level actually was tested, and that was tested as support as we came into the 10 o'clock time frame here. So between 8 and 10. Between 6 and 8 in the morning, that level has held as resistance. That's at the 4270 area. Again, I think at 4270, 4275, somewhere right around there, we're finding that that is a common area of support out here as we take a look at at all of these different tools and techniques. And speaking of tools and techniques, I'm sure they're going to be sharing with folks this evening, beginning at 5:30. It's about an hour workshop. Extraordinary tools that you want to make sure that you have in your arsenal. These are not tools that you're going to be able to go to and indicate. There's special tools that I'll be able to show you that you will be able to use. You'll be able to do this yourself. Won't take a lot of work out there, but you will be able to understand the market, its behavior pattern, what it does on a continuous and ongoing basis. We're going to show you a tool that works like 90% of the time out there. Really helps you to unlock. Like if you're kind of like a Sherlock Holmes trying to unlock the message of the markets, this is a workshop that you want to go to, and it couldn't be easier. Now, the good folks at TFNN have made this as easy as possible for you to be able to get in. How do you do that? You come over to the homepage at TFNN.com. You sign up for it. You're getting access to my newsletter, and you can sign up for free. Your credit card's not charged. You're getting access to me for the next 30 days. Not only just tonight's workshop, which is loaded with information and tools that you need, but you're also going to get direct access to me over the next 30 days. So you want to reach out to me, reach out through the video screen and give me a call. You're welcome to do that. I'll assist you. You want to go ahead and send me an email, have me help you with a chart or something, or answer a question for you, I'm happy to do that. You want to use Skype and do that? We can do that as well. So I want to see you tonight. It's free to get in. The only cost is, quite frankly, not showing up. So I want to see you show up there. So we looked at the 2 hour chart. We didn't look at the 30-minute chart, though, for the NQ. If we go take a look at what its message might be, looks to me like this thing has recycled and has begun its new leg A to the upside. We're only in the first of at least 4, maybe 7 to come. We take a look at that 30-minute chart. She is up above resistance levels. If we take a look at A to B equals CD patterns out here, let's go back to, I'd have to say, let's go back to a chart that's not so cluttered. Let's go take a look at something that is not as cluttered. Let's look, let me see, maybe the 120-minute chart, maybe less clutter here. Let's see. That would be less clutter. There's probably where here's likely where the price point, where the NQ is headed to. And so if we take a look at its A to B equals CD pattern, it is very, as we have taken a look at all those charts out there, it's very likely headed to the 4330 level. That's the larger A to B equals CD pattern that is unfolding out here. So you're right now trading at 4293. That's probably got another 37 points or so to the upside as we've taken a look at all those charts out there. So, and what's going to fuel this fire out here, the head fake, I typed into the Tiger's Den out here that this is just a sucker punch that the market has thrown at you. I don't want you to buy into it. I do not want you to buy into it. We really sort of covered this here. You've got the actual ultimate of liquidity gauges, which is the Japanese yen, the euro versus the Japanese yen currency pair out there. This is the ultimate tool for understanding liquidity. And with regard to this understanding liquidity, you've got this currency pair moving higher. When this currency pair moves higher, money flows. It flows through us, and it flows right into the markets out here. That doesn't mean that the market can't go in the other direction. If this currency pair keeps going higher and the market keeps going in the other direction, you'll find some pattern out there, but find that pattern to actually buy. Now, this may not be a long-term trade. It's the kind of trade that you're out of maybe in a few days, maybe next week sometime. We'll know it when we see it when we get out here. But right now, this liquidity gauge says don't buy into this market trading up. This is something to be bought depending on different patterns that you're playing out there. If we take a look at the VIX index, what is this message? The 50-day exponential moving average, that's right now priced out at 1761. The VIX is at 1751. Come on. Could Paul Revere ride through the streets of our stock charts any more than he already is? Could he possibly yell to you and I anymore? No, I don't really think so. Hey, does that mean that the market doesn't change at 1041? It's 1040 right now. I can give you the message of what the market is at 1040. And we took a look at charts. We take a look at patterns out there to give us a feel for what's going on. So only if something just all heck breaks loose and then there's a problem. I request to go take a look at oil. Let's go take a look at the oily one out here. Let's go take a look at it. It is down $1.44 as we speak right now. I believe it's made the 0.786 retracement. So far here this morning, probably right to the T. What's the 786 retracement? Well, let me take a look at that. That was really off its last set of swing points out here. So let's take a look at the larger one. Let's look at this. Let's come from the swing point low out here. That was back on November 29th into the swing point out here from February 3rd. And it's possible that what oil's trying to do is make that 100% move a move, get back to the lows here from February 5th and make the 0.618 retracement of that entire move. It did it once before. Maybe it's going to do that again. That's around the 47.36 level. Let's put this on a intraday time period. Let's put this on a 30-minute chart out here. As we take a look at that, looks like on a 30-minute chart, it's forming a hammer candle as we speak, but you've got still about 20 minutes, 18 minutes left in this session. So I don't know if that's going to be a hammer candle at a 1 to 2 A to B equals CD to the downside. Again, this is a 30-minute chart out here. Typically, when you do a 1 to 2 A to B equals CD, the market does something else. So on the 30-minute chart out here, if oil closes at about 48.60 as we come into the 11 o'clock time frame, then what you will likely have had, I don't know, if we spike higher and pull back, then you won't have a hammer. But right now, that's what the setup is. But we really won't know what the candle formation is until the close of that period out here. So we'll just see. Right now, you're trading again just below that 0.786, but we can see it's trying to step in here and form its next buy pattern. That's what's going on inside of light sweet crude. That was taken a look again at a 30-minute chart as well as the daily chart. Now, what happened? So we've really covered the overall market and not taking that Michael Jordan head fake that the sellers kind of threw out there for you, and just utilizing some simple tools. We'll come back and see what actually happens here tomorrow or later in the day. Well, it won't be later in the day, but certainly tomorrow. We didn't cover gold. Let's take a look at gold. It's off $8. We didn't cover any of the metals out here. What do we know about gold? Well, we know that full moon that took place on February 3rd was an initiation move, and it was an initiation move to the downside. Price has been traveling basically in a descending price channel. That's still, for the most part, trading within that. I'm more concerned with the top than I am the bottom of that price channel out here, although I probably can even move the bottom. Can I move the bottom now? Yeah, I can move the bottom of that. I don't know, is that the bottom right there? More so what it looks like here gold wants to do is make a 0.618 retracement. Number one, it's trading below this little B point of the A to B equals CD pattern. That was the December 9th high. That was at 12.39. You're trading at 12.23 right now. We know that the large commercial traders, that they got on the bandwagon. That bandwagon was to move to a short position. Their net short position was up at high levels again. And says to me 1198 is the target. Now, volume-wise, if you're coming down in that 1198 area with volume that says 1168, could be your area. We had this wild trading session. Remember back here on December 1st, that was a big wild ride, Mr. Toad's wild ride. My last name is Rhodes, and of course, as a kid in grade school, it wasn't grade school, it's probably junior high out there. You get people, they make fun of others. If you've got somebody, you got a kid or somebody that, what you got to do is the whole key to life. I talk about that one of the most important tools, as I say, the most important tool that you can ever learn is learn how to influence. The market influences us. I influence you maybe in my reads of the markets. The key is you got to be able to learn to influence yourself. Now, that skill of learning to influence yourself, it also goes right along as I open my opening segment, my opening hour out here. I talk about, the importance of being able to learn that life works for you, not things happen for you, not to you. The ability to do that means you find the gift in everything. That's called reframe. Reframe and elevate is really the tool and the technique that's out there. So imagine this, I'm a kid and I learned this at an early age. I've done it. People always say I think differently. I take that as a compliment out there. Sometimes people might say, oh, that's you got to think differently in life out here. And that's really what I'm going to be sharing tonight during the workshop. I'm going to teach you how to think differently about using the VIX indicator. I promise you it is going to be totally different than any way that you've ever done it. If I was going to teach you the same, well, then heck. Why I wouldn't even attend my own workshop if I was just going to teach you the same things. But I'd like to teach you how how did I reframe, the word toad? I said, hey, I don't know about you guys, but I have a ride that's named after me out at Disneyland. What do you guys have? Mr. Toad's Wild Ride. What do you guys have? You reframe and you elevate. Guess what happens? You shut that down altogether. So remember, folks, life always happens for you. That for you happens to be tonight at 5:30 when I begin that workshop. So I want to see you there, and we'll practice reframing and elevating. Right now here, the reframing of the gold chart is, look for that 1198 as we speak right now. Let's take a look at, so we looked at gold. Let's go look at silver out here. Silver's back 9 pennies. Let's go see what it is doing. Silver here is trying to make an A to B equals CD to the downside if it can bust through the lows. The lows being the January 29th level. Hasn't busted through them, 1674. Keeps testing that area. But if it busts through that area, then you're looking at a price of about $16 or so. If we look at its retracements out here from the low back in December 1st all the way to the high out there, you get a nice little Gartley buy if it can make it, and that's down around 1582. So 1582 to 16 buckaroonies, that would be nice, but it's not going to happen until you see it close below 1674. You're trading, or it's trading at 1677 as we speak right now. Let's go see. Let's take a look at some things here. Moving Tesla, TSLA is a ticker symbol, off about 4%, down $8 and change out here. I guess they were struggling with some sales here in China. So we know that Tesla has been in this descending price channel out here. Let me see if we can actually go to graph that out here. That looks like that really is the top of the price channel and the bottom of the price channel, probably right about there. So there's your descending price channel for Tesla. If you were one that wants to buy Tesla, I would say buy it from the bottom of the channel. In the case of Tesla, that's quite a bit lower. That's probably priced out somewhere around 160 or so. Let me pull this back even further here. Let me go get a retracement out here, see if we get anything that falls in line. So you've got this set of swing points from May of 2014. That might be maybe that's where Tesla is headed to. If we go from the low from November of 2013 to the high out here back in 2014, the 183 level happens to be your 0.618 retracement. Just of that move, that area was tested once before, so maybe it's the 153 area where Tesla. Either buy Tesla at the bottom of the price channel. I'll go ahead and delete the retracements out here. Either at the bottom of the retracement and take a look at what happens as it gets up towards the top, or you buy a breakout if it can break above that descending price channel. But that's where Tesla has been trading within. It should be no secret as to what its pattern is. If we take a look at also moving here to the downside, let me see, what do we got? We've got a couple big percentages to the downside. Let's look at America Online, AOL, 3.5 million shares to the downside, gapping down this morning. They generated revenues of $710 million versus $679, so they beat the top line. Net income was $59 versus $36 million, so not too shabby there. Nonetheless, the ultimate indicator of what is going on fundamentally is what are the buyers and sellers doing. And right now this morning they're selling. Looks like they're going to sell AOL all the way down to maybe about the 32-31 level. Steve Rhodes, TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open, even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 65 points right now. S&P is off a couple of points. Pretty interesting stuff just in general in the news. How Brian Williams, that whole scenario going down. As I listen to some of the, when we take a look at the markets and take a look at what it is that I am privileged to get the opportunity to do with you each morning out here, is we're really just taking a look at patterns. What you and I are when we're as technical traders is we're pattern recognition specialists. And that's really what I consider, myself to be. I share with you some different tools that I use that I apply to life, let alone the markets that we trade out here. And really, I'm a pattern recognition specialist when it comes to life. A strategic intervention coach. I can take anyone. I don't care if they're suffering from depression, if they've got problems with relationships, if whatever those relationships are, whether they're spousal, whether they're family, friends, coworkers. I can take people that have whatever hurdle it is, whatever phobia it is that someone has, I can basically take within, let's say, about a 5 hour, on average 5 hours, and I can help them plow right through that. Whatever it is that's stopping you from being able to take action, there's a pattern out there. So as we take a look at, and it's just about understanding that pattern, being able to identify. Brian Williams has got the same pattern out there. You know, I heard some of these people now, why did he do what he did? I'm not understanding him. It's really simple, folks. There's 6 human needs that each of us have. You got the need for certainty, which is basically the need for comfort. You've got the need for uncertainty. The reality is the quality of your life is all dependent upon the amount of uncertainty that you're willing to accept out here. Number 3, you've got the need for significance. Significance. That's about feeling special, unique. You know, we all have that need for significance, and it's all really about love and connection. Those are your 4 primary needs that are out there. 6 and 7, or 5. I'm sorry, 5 and 6 are about growth and contribution. Guess what my needs are? Guess why I do this show? You think my needs are about significance or growth and contribution? Exactly. You know, and a person who has growth and contribution as their 2 primary needs, they're going to look at life a whole lot different than somebody who's got certainty and significance. Where do you think Brian Williams might fit in there? Now, I think he's trying to meet all those needs, but with regard to the stories that he was telling, those were the stories about significance, right? He needed to feel even more significant. He didn't have to tell that story. You know, he's a good storyteller. He's a good reading the news out there, right? What is it that he's got to do? What is it that he's got to do in order to make the comeback here? It's really simple. If Brian Williams is listening to this show, he will take my advice. Okay, if he wants to make a comeback, and if he wants to change, because he's got that need for significance, he certainly has that need for certainty. I think those might be his 2 primary needs that he's got out there. And all he needs to do is one thing during the 6 months that he's on this hiatus, if he wants to be able to get back there. What he needs to do is, instead of doing things where he gains significance by, you know, saying I was here versus he wasn't there, you know, his plane was, his helicopter was shot at by an RPG or what have you. What he needs to do during the next 6 months is he needs to go give significantly. So you can get significance by giving more. Really, it's what I'm going to be doing. So I'll get my significance, my growth and contribution tonight during my workshop from 5:30 to 6:30 by giving more to you, more than anybody else will ever give you, and being able to help you to understand patterns that other people wouldn't be able to help you understand when it comes to the volatility index out there. We're not going to talk about the minutia of the volatility index. I'm going to show you actionable things that you can use for trading out there. All Brian Williams needs to do, the story that needs to be told for him for the next 6 months, is how he was out there helping others each day. If he does that, he will absolutely be able to come back into the media, get his job back, get his pay, and so forth. But if he doesn't take that action, I think it'll be really, really difficult. Folks, if you are struggling from depression, you're depressed, life isn't, look, you can reach out to me. You can always reach out to me. Anybody can do that. But I'll tell you, the one thing you need to do, if you know somebody that's suffering from depression, go take them someplace and have them start giving to others. It's really hard to be depressed when you start giving to others. And that's the end of the show. Hey, folks, stay tuned. Our man Basil Chapman is up next after Basil. It is Wonderful Wednesday. That means we got Larry Pesavento, Daryl Martin, David White, and the Tom O'Brien Show from 3 to 5, and my workshop from 5:30. I'll see you there. Have a great Wednesday, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.